Today is the 7th of July. We're going to be looking at on screen, you see the data that's on, or that came out today. For GBP, we had very minor data, and we also had a lot of data for Canada, Mexico, and the key ones here, non-farm payroll, the first Friday of every month. We get that with the unemployment rate attached to it. As you can see, we've got mixed data. Unemployment rate dropping, surprisingly. It was forecasted 3.7, but the consensus actually was 3.6, so that was online or on form with it. The NFP came out lower than previous and lower than consensus and forecast, obviously bad for the US dollar. Then other bits and bobs of the data that came out varied in terms of positive and negative for the dollar. So this gave a mixed sentiment and gave a liquidity wick on gold, and we're going to see how we played that. But beforehand, we're going to look at GJ in the morning and what we actually took on GJ before the data came out. And if we look on the charts now, we can see, scroll back, we can see a buy, and we were in a downtrend for the whole of the morning after hitting all-time highs again, or not all-time highs, but highs from the most recent time in the last 5-6 years at 184. Reacted there again and came all the way back down. As we were in a downtrend, I was looking for a reaction, as I knew that we are overall in a higher time frame bias of bulls. So roughly speaking, I was looking for buys around 182,500. Reason was, if we look on the 1 hour, we can see to the left a lot of support being formed, and even at 182,200 you can see more, but eventually price did go down to 182. So I took a risky high risk high reward buy at 182,500. We didn't get what we wanted. We got a lot of consolidation after we entered with a double bottom. You can see 1, 2, and then entry. Unfortunately, yeah, we didn't get what we wanted, and the SL got hit. However, if I managed that correctly, I guess you could argue that once price failed to break the second time, you should be closing there just to protect your profits. But overall, good entry, just market didn't want to go that way, so poor management. Then we hop over to GJ again, and we see after we got the reaction at 182 flat, we had a push up all the way to 183, so 100 pip push. And then what happened the rest of the day was, when the data came out and got digested, it gave safe haven currencies like gold and like JPY more strength due to mixed data and just the stock market also gaining more strength because people are wanting to invest more and see the slightest bit of chance that the Fed will stop rate hikes. That gives them gives the market that rally that it wants. They call it the greedy stock market, and it's a lot easier to buy on it than it is to sell. So the same for safe havens. Everyone will flock to it, and by everyone I mean investors will flock to the safe havens when there is times of economic uncertainty. So we can see this here. From 2 o'clock, we had 183 reaction again, double top and push down, continuation. And what we're looking for is just to continue playing those sells. We knew that there were clean candles to the left below 182,500. Took a nice entry, got a classic break and retest, and we knew that it's a high volume around NYSE open at 230. So we took an entry once we reacted with a break and retest, and unfortunately, we nearly hit TP. We're about 7 pips away, which was unfortunate, and I actually got stopped out. My SL got stopped out in profit. I should have maximized, or could have maximized more. All these different boxes here are just 1 minute areas of support that price could have reacted at, and you can see it reacted at this one in particular, 182,134, and that was overall a good trade, excellent entry, just poorly managed again. So overall, 2 trades today, 2 really good entries, just both poorly managed, and could have maximized profit and reduced losses. If we look at the last trade, which is on gold, just to end the day off, we had an alert set on gold, and this was at key level 1929.500. Reason was because we broke out of this intraday consolidation, and above this we got a close on the 1 hour, which is nice to see, and we were looking for a retest of 1929.500 to then continue up and retest the higher high that was created, in line with the current market sentiment that just came out after the data, with NFP being mixed and safe havens gaining a bit more short-term strength. We understood that is short-term, so we're not going to hold a trade for a long period of time. Once we saw this reaction, I do agree this was a bit eager. We should have waited for the double bottom there to enter, which would have been a better entry. But either way, entry was at this point. Stop loss below, about 22 pip stop loss below these candles. And then we were aiming roughly just for the 15-minute highs. So about 1 to 1.163. You could argue with a better entry, you would have had a lot better a lot better risk reward, and I agree. You can see we had a lot of consolidation, but we kept respecting this uptrend on the 1 minute, which you can see in drawn with the arrow here. We're bouncing, so we're still respecting that bullish market structure. What happened was we failed to continue. We lost a lot of momentum here in these candles, 1, 2, 3. And my whole philosophy here was I didn't want to close a trade based on one minute candle. However, when entering a higher risk trade, you need to manage it more aggressively. And I failed to do that again. So 3 out of 3 trades today were poorly managed, and I got stopped out to end the day in a loss rather than a profit. So overall, it should have been a profitable day, in my opinion. Just all 3 trades poorly managed, but 2 really good entries and 1 decent entry. But all the trade ideas were very valid and stuck with the plan. Overall, positive day in terms of psychology and reiterating our plan or trading plan in general. We're going to be going into next week. We see Monday the 10th of July. We've got inflation rate for China, not really relevant to us, but we've got some Fed speakers throughout the day during the NY session, which may give some more direction to what the Fed are thinking. Either more hawkish comments giving gold sells and dollar strength, or maybe no comments at all, just neutral, making the market range even longer and therefore bring lower volume volatility. And as you can see on the screen here, you can see the 3 trades that I took on there.